Is crypto even safe right now? I mean, let's be honest. The markets are going a little wild. Interest rates are bouncing. Inflation is still hanging out like that guest who won't leave the party. And global tensions, well, it's a lot. So what does that mean for crypto? Should we be worried? Should we jump in? Should we just unplug, grab some snacks, and check back next year? Let's take this one step at a time, and I'm going to walk you through exactly what's happening, what to watch for, and how all of this affects regular people like you and me. I want to start with what's actually going on. The traditional stock market, stuff like the S&P 500, the NASDAQ, it has been super jumpy. One week things look good, the next week, volatility. So part of that is because of the Federal Reserve. The Fed's been raising interest rates to try to bring down inflation, but higher interest rates mean borrowing money gets more expensive and people spend less, which slows the economy down, and that is what is making investors twitchy. Meanwhile, we've got global stuff going on, conflicts overseas, supply chain issues, oil prices rising, and now rumblings about more banking stress. All of that feeds uncertainty. Now, usually when traditional markets are shaky, people go running to things like gold or cash, but lately some folks have been turning to crypto, especially Bitcoin, as a kind of digital safe haven. But sometimes crypto drops within the stock market, and sometimes it doesn't. So what's the deal? I want to talk about how all this affects crypto. There's a free crypto training that breaks down everything I'm covering today, and you can grab it right now. Just check the pinned comment below for the link. The truth is, crypto's in this between phase. It's not quite the wild west that it used to be, but it's not fully mainstream either. So sometimes, especially when big institutions are involved, crypto tracks right alongside stocks. So when Wall Street gets nervous, crypto dips too, because big players pull money out of everything, including Bitcoin. But here's where it gets interesting. Crypto sometimes bounces back faster than stocks. Why? Because regular people like us are still buying it. We are still believing, we're still using crypto in daily life, and those demands build stronger foundations. And also, people are using stablecoins, which are crypto coins tied to the United States dollar, as a safe space during all of this chaos. So if Bitcoin's too jumpy for you, something like USDC or DAI might be your speed. Now, you might be wondering, is this a buying opportunity, or should you just kind of wait it out? Now, honestly, that depends on each of our personal situations. If you're looking to turn a quick profit, maybe sit tight. But if you're thinking long term and you believe where crypto's heading, moments like these are where people start building real positions. Now, I'm not dumping my whole life savings in, but I'm definitely paying attention. Now, here's what to watch for in the coming weeks. Fed meetings. If they keep raising rates, it will keep markets under pressure. If they pause, things might bounce. CPI reports, that's inflation data. So if inflation slows, people breathe easier. And if it spikes again, hold on to your hat. Crypto regulation votes. This is also huge because if lawmakers come down hard on crypto, the market could wobble, but clear, fair rules could actually boost confidence. Whale moves, that's what we call it when people with huge amounts of crypto, whales, make big trades. When they move in, the ripples hit the rest of us. And altcoin performance. Are coins like Solana, Chainlink, or Polygon, are they holding up? Or are they sinking faster than Bitcoin and Ethereum? Now, this tells us how much risk people are willing to take. Exchange liquidity, Platforms like Binance and Coinbase, they need healthy reserves to handle big buy-sell waves. If liquidity dries up, that is a red flag. And again, we don't need to track all this just by yourself. Just follow along here, and I'm going to keep breaking it down in plain English. Now, let's zoom in on how this actually affects everyday people like us. If you already own crypto and you're wondering what to do, please do not panic. Let's ask ourselves why we bought it. Was it for a quick flip, or was it because we see it as part of a long-term shift in how money works? If it's the second one, great. Now, short-term dips are part of this journey. It's like a jazz solo. It can kind of get messy in the middle, but it comes together in the end if you let it play out. If you're new to crypto and you're thinking, should I even touch this right now? I hear you. You don't have to go all in. You don't have to understand blockchain engineering. You just need to start small. Open a free wallet. Download an app like Coinbase or Trust Wallet. Buy $5 of Bitcoin or $10 of stablecoins. Play around with it. Learn how to send and receive, because this alone will put you ahead of 90% of the people. All right, let's talk feelings, because yeah, money stuff does get emotional. Fear and greed run this whole system. When the news is good, everyone is hyped. And when it's bad, people freak out and they sell everything. That is why it helps to have a plan and not base every decision on a headline. Now, if you're constantly chasing the latest news, we're going to end up dizzy and broke. Volatility is totes normal in new markets, and crypto is still young. Think early internet days, back when people were like, why would I ever send an email when I could just fax somebody? I mean, yeah, that young. So let's recap what we've covered. The world's a little shaky right now. Markets, inflation, and global stuff is all connected. And crypto is reacting in some surprising ways. It's dipping sometimes. It's bouncing back fast other times. Big players are in the game now, but everyday folks are still showing up. And we can use stablecoins as a calmer way to get started. We want to watch for key events like Fed meetings, CPI reports, regulation news, and big trades from whales. And most importantly, let us not let short-term fear mess with our long-term vision, because crypto isn't dead. It's just going through a little bit of a growth spurt. And yeah, it's a little bit awkward, but it's also full of opportunity. So here is my final take. Let us not get rattled by headlines or Twitter drama. Let's not compare ourselves to people who bought at the dip at the exact perfect time. Just keep learning. We want to stay curious, and we want to take one step at a time. And hey, don't forget to grab that free crypto training. It breaks all this down even more clearly and gives you a great foundation to start. The link is right there in the pinned comment. If you found this video helpful, give it a like, hit that subscribe button, and drop me a comment below with your biggest crypto question right now, because I would love to hear from you. I'm Sarah, and this is Prepare to Prosper. See you in the next one.